All right. Good morning, everyone. Thank you so much for joining us today for our program, Home Buying and Financing 101 During a Pandemic. After the webinar, you will be receiving a link to the webinar recording and presentation slides in case you'd like to review the information. We will have some time for Q&A at the end of the presentation. So if you have any questions, we ask that you please not use the hand raise feature that you see on your screen. The reason for this is just because it's very difficult for us to see when someone has raised their hand. So we want to make sure we answer everybody's question and don't skip anyone. So instead, please go ahead and just type in your question into the question box. There are also some handouts under the handout tab on your screen that you're welcome to download. But let's go ahead and get started so that we're on time. I would like to introduce you to our speakers for today, Nicole Manley and Andrew Lumina.
Thank you so much, Hersanti. Hello, everyone. Thank you for taking time out of your busy day to join us. It's good to be with you. We are going to be discussing a very hot topic today, homeownership, and the benefits your employer has included as part of your benefits package. So there's been a lot of questions and confusion. I mean, the real estate market is nuts. I think everybody agrees. So we're going to spend some time really diving into what's happening, where are we headed. So your employer understands that the importance of having safe and secure housing, especially with the pandemic. A lot of people have thought about, maybe it's not a good idea to continue to rent and share walls, and I want to have my own space. So this benefit is made available to you as part of your Cascade Center's EAP benefits, Employee Assistance Program, at no cost. I want to remind everybody that it's also completely confidential. So anytime you reach out to Cascade Centers, it's confidential. Nothing will be shared with your employer. Employers also understand that employees who are homeowners and are planted in their communities through sports and school are 3.5 times more likely to stay in their current jobs. So it's important if you're thinking about homeownership or just want to kind of navigate through that process, you have a whole team here to support you, come alongside you, so you're not alone. I've been born and raised in Portland, Oregon, and so I've seen our market really change over the years, but more so just in the last 10 years or so. I've been helping our employees for about 10 years now, so we've helped with a lot of employees get into safe and secure housing. To date myself a little bit, I watched Washington Square being built. So a lot of changes over the years and a lot of growth. So as we transition to our next slide, our time today, we're really going to be diving into the homeownership benefit, how you can save money. And coming through the EAP, we're going to talk a little bit about, is it wise to purchase a home when it's a seller's market? What does that mean, and how can I prepare? We're also going to spend a few minutes talking about the home buying myths. There's a lot of myths that we're still hearing today about home ownership and getting pre-approved, and who can get pre-approved and who can buy. And so we have, again, Andrew here as one of our guest speakers to talk about the mortgage process, where rates are headed, how we can prepare, and then making an offer. That's really the hot topic, is what do I do to get into the home buying process, and what does it look like when I need to make an offer? So it's hard to know who to trust, and especially if you're a first-time home buyer and never have purchased a home before. Many times it's hard to even know what questions to ask or where to begin. So I always tell our employees, even if you're a year or two away from buying, maybe it's not something you're thinking about doing today or right now, reach out to us, even if it's a future thought that you might have about homeownership, because there's things that we can do, maybe some steps that we can set up for you to help you plan and set some goals for you. So I always like to share an article I found, and this was before the pandemic. So before the market really got crazy, it talks about, it was through homes.com, and it talks about the stress caused by buying a home. So if you've ever been through the process before, or if you have a friend or coworkers that's currently going through the process, it can definitely be stressful. It talks about 1 in 3 home buyers admitted to shedding tears at some point in the home buying process. And it really touched me because I thought, you know, this is supposed to be a happy time. you're buying a home, and it should be fun and exciting, but it can also be very stressful at the same time, and we recognize that. And so again, you're not alone in this process. We want to help educate you. It talked about 20% of home buyers, only 1 in 5 actually felt confident while looking for their home. So we want to build that confidence and really support you with this process and help you. And so as we transition to the next slide here, it talks about an overview of the benefit. And Advantage Home Plus recognizes that not one size fits all for everybody. We spend our money different, all of our credit scores are different. So we want to look at you as an individual, get a snapshot of where you're at today, and really help you plan and process and provide you with steps that'll help with the homeownership journey. So we're all about education. We've got some wonderful tools. Our mobile app is extremely popular. It's got some wonderful articles, and we're constantly doing webinars and educational webinars to help with the process. Don't forget too that I always like to highlight the money coaches through Cascade Centers EAP. Your employer pays for 30 days every year of financial benefit and coaching with a licensed advisor to help with budgeting or consolidating debt, things like that. So a lot of times we're working with the money coaches hand in hand to help with the journey of homeownership. I want to mention too that with the homeownership benefit specifically, there's no limit on the number of times you reach out to us. Many times we're working with individuals for a year or two before they're ready to buy, or they're in a position with budget and down payment in order to buy. So there can't be any limit. So you literally could reach out to us every day if you wanted to. So I always like to mention that. Family members can also access the benefit. So if you have an adult child, for instance, that's thinking about home ownership and maybe wanting to explore options of what that looks like for them, you can pass your benefits, your EAP benefits, along to them as well. Also, I found an article, 2018 Urban Institute study found that those who bought their first home before the age of 34 actually had the greatest housing wealth built by their 60s. So buying a home at an early age can give a person a significant head start on wealth creation as well. So again, we want to explore those options for you. We recognize that it's the largest investment that you'll make in a lifetime, so we're here to help you navigate through that process. One of the benefits is the financial fitness consult. You can reach out to us and get started on a financial fitness consult with one of our preferred providers to see what programs you may qualify. I mean, there's a lot of down payment programs that people just aren't aware of or don't know about, and grants and assistance available. So again, we're here to help you explore the entire process and get you to the right people who can help. We're also nationwide. So if you're thinking about maybe buying that vacation home in another state, we can help with any of those benefits and services nationwide. So as we advance to the next slide, I always get the question, well, show me the money, Nicole. Coming through the EAP and Advantage Home Plus, what's the benefit that I can receive if I'm thinking about selling, remodeling, renovating, refinancing, or buying? So I always like to highlight some of the fees that are associated with buying, especially for our first-time home buyers. There's what's called third-party fees, involved in a purchase. So a lot of times I'll hear, well, I have my down payment, I'm ready to go. Well, there's also closing costs that are involved with buying a home. And typically closing costs can be anywhere from 2.5 to about 2.5% of the sales price. So there's also third-party fees like credit report, appraisal, title and escrow fees that are involved. There's also typically an inspection that you'll want to have done as well. So there's a lot of out-of-pocket expense that can happen with home ownership. But coming through the EAP, you're going to have a $1,000 credit, which is actually your mortgage benefit. So when buying or refinancing, there's a $1,000 credit that will help with closing costs or lender fees. You can also use that $1,000 credit to buy down their interest rate, but most individuals are using it to help pay for closing costs. There's also a real estate credit. So for anybody who is selling, you have a 15% reduction in the agent commission that's charged. So we want to make sure that's applied and with closing cost. So remember, as a seller, you pay agent commission. As a buyer, you never pay agent commission. So we want to save you some money on that real estate commission that's charged when listing a home. Now in Washington, it's not allowed in Oregon, but in Washington or other states, there's about 3 or 4 states that don't allow the buyer's credit towards closing costs when buying. But if you are thinking about buying across the river, or you are in Washington state, you can also take advantage of that 15% credit towards your closing costs for buying. So it can save you some significant money with closing costs specifically for both mortgage services and real estate services. So advancing to the next slide, is homeownership a smart decision? I get the question all the time, well, I don't know, Nicole, if I should even consider buying. What does that look like for me? How do I even begin to navigate that process? So, you know, unless you're living with mom and dad, chances are you're paying a mortgage payment. Our rent is extremely high in the Pacific Northwest, our housing cost. So unless you're living with mom and dad, you know, it's mortgage payments, what's nice, are fixed where rent can go up. Being a homeowner allows you to have the opportunity to build equity in your home. We had a family who reached out to us last January before the pandemic, just to give you an example. And they were able to get pre-approved and get under contract for a home purchase before the lockdown happened in March of last year. And he got locked in, and then the interest rates dropped in March because of COVID-19. I mean, who would have ever guessed that a little virus could have dropped the interest rates? So then a year later, actually less than a year later, in December of that same year, last December 2020, he thought, well, I'm going to look into refinancing and see if I can lower my interest rate because of interest rates being so low. So he was actually able to refinance because the value in his home had increased so quickly over the previous year. He was able to remove mortgage insurance, PMI, that's what lenders will charge if you don't have a minimum of 20% down payment, and then lower his monthly mortgage payment, and by lowering his interest rate. And that never happens if you're renting a home and paying your rent to somebody else, a landlord. So that's a perfect example of how you can really make your housing work for you in the future as well, by capitalizing on that wealth that you're building through equity. We have employees who have been able, just within a short amount of time, 15 months to 2 years, are able to refinance their mortgage, do a cash out refi, use some of that equity that they've built, and pay off student loan debt or pay off a car loan and get rid of a payment. So it's amazing how the interest rate has a huge impact on your monthly payment as well. Just to give you an example, the interest rates are hovering around 3%, 3.1%. Andrew's going to talk a little bit more about that. But just to give you an example of an interest rate, if that interest rate, let's say on a $300,000 purchase price, goes from where they are now at 3% to just 4%, which is still a great rate at 4%, your monthly mortgage payment is now $167 more a month on a $300,000 sales price. So you can see how quickly interest rates can have an impact on your monthly mortgage payment. Before the pandemic, I mean, even back in 2016, at the last presidential election, interest rates were closer to 4.85%. So the interest rates have dropped, and we're seeing a lot more competition among buyers because of those low interest rates. And like any investment, the longer you're in the investment, the better the return. So I asked one of our real estate experts who does a fantastic job in the Portland, Marion County area. I asked her, I said, Melissa, what are you seeing right now with what's happening? Give me an update on the real estate market and what's happening for buyers. So she indicated that we're seeing less than 2 months worth of inventory right now on the market for a straight 5 months in a row. And she indicated that prices are increasing about 1% every month. So, which is really hard to keep up with. So if you're thinking about home ownership, let's figure out if sooner than later makes sense for you. Because unless you're going to be able to save 1% each month, or you're going to get a significant pay increase over the next year, it's going to be hard to continue to save to meet that 3% or 3.5% down payment needed for a home purchase. She also indicated that homes are selling anywhere from 10% to 30% over list price due to the low inventory and the high demand. So we have super low inventory, lots of buyers. They're saying that more people are moving out of California right now than are moving into the state of California for the first time ever. So we see a lot of investors or just buyers coming up from California and other states. Portland is still the cheapest city along the West Coast to purchase a home compared to some of the other large cities like Seattle, San Francisco, Sacramento, LA, and San Diego along the West Coast. So Portland has become a really popular place. Actually, all of Oregon, we're seeing Salem. Nobody can afford Portland anymore, so everybody's moving down to Marion County, and now we're seeing Marion County, the prices just explode down there in Marion County. Eugene, another hot market as well. The Bend, Redmond area, again, just a really popular vacation area. So lots of demand there. And then all along the coast, up and down the Oregon coast, we're seeing just lots of multiple offers, bidding wars, and a lot of cash offers for properties along the coast right now. So I asked Melissa as well, I said, well, what are you doing to help employees get their offers accepted? And her and her team really have come up with some significant tactics, and you've got to get creative in this market when it's a seller's market with low inventory. So what she does in educating her buyers is she talks about really presenting the best foot forward in the offer itself. And she talks about shortening the inspection period down from 10 days to 5 days. Because if you think about it, sellers are anxious to close so they can move on with the next purchase and buying. So typically they need the funds from their current home and the equity they've built in order to move on to their next home purchase. So shortening that closing date as much as possible can be helpful. She also indicated that limiting repairs Requests for repairs only to minor repairs over 2,500 has made a huge difference too. So if a seller has 10 or 15 different offers they're looking at, and they're trying to decide who to pick, some of these tactics can be really helpful in getting your offer noticed and accepted. So putting your best foot forward, letting the seller know that you're not going to nickel and dime them on some of the simple repairs that are not important or which can be done later, and that you're only going to negotiate with major repairs over $2,500 can make a huge difference. Also offering sellers a 30 to 60 day free occupancy after closing. So you close on the purchase, but then they do like a rent back from you to allow them to offer, to identify and make an offer on a new home. So that's a huge concern of sellers right now is, I want to sell, but I have to find a place. I don't want to move twice. So I have to find a house, but I can't find a house until I sell my house. So a lot of times that can make a huge difference too. And just letting the sellers know up front that, hey, I'm willing to allow for a longer closing, well, not a longer closing period, but free occupancy if needed, if that's a concern of yours. So as we advance to the next slide, I really want to talk about some of the myths that hold people back. And one of the myths that I still hear today after 10 years is I need 20% down payment in order to buy. And it's amazing how I just talked to a gal yesterday, as a matter of fact. She thought she had to have, you know, anywhere from 5% to 10% minimum down payment. And that's the thing, is the lending landscape has really changed among lenders right now, especially during a pandemic. We saw those changes last year after the lockdown happened and the high unemployment rates. A lot of lenders were increasing or changing their guidelines, increasing income requirements and changing guidelines requiring higher credit scores. One lender, a super large lender nationwide, Chase Bank, was requiring a minimum of 20% down payment. So as soon as we see the unemployment rates increase, it makes lenders super, super nervous. So the experience you have during a home buyer pre-approval and mortgage process is really going to determine who it is you're speaking with, because you literally talk to 10 different lenders, you're going to get 10 different answers. So again, we want to help you connect to the lender that makes the most sense for you and what you're trying to do. And so let us help you with that. Also, if you're talking to a lender already, maybe you've been in the home buying process for a while and you're pre-approved, let us help you explore the estimated closing cost worksheet. It's super important that you ask for the estimated closing cost worksheet from a lender up front. A lot of times you do have to ask. They don't automatically send that to you. So ask your current lender to send that to you. It's going to show all the fees that you're going to be paying at closing. It'll show if you're paying a loan origination fee, what the lender's going to charge as far as points for mortgage services. You know, I hear all the time, well, I'm getting a great rate. And I ask the buyer and the employee, well, yeah, but how much is it costing you? So definitely ask for the estimated closing cost worksheet. It'll be in a PDF type format on company letterhead. It'll pertain to you. It must have your name on it to be quote specifically for you and your needs. And then we can do a review of that estimated closing cost worksheet, have our VP of operations take a peek at it as well, and provide you with questions to go back and ask the lender, and questions that you can ask to see if any changes or anything different. Because there's so many different programs out there, and each program, each mortgage product has its own pricing. So we really want to make sure you're in the right product that's going to help you reach your goals. And so as we advance to the next slide here, I know a lot of times we hear, well, I need a high credit score too. And how do I get to a high credit score? I hear when I connect with our employees by phone, well, I have a terrible credit score. Oh, well, what's your credit score? Well, I have a 700. I'm like, that's a great credit score. That's not a terrible credit score at all. So really think of it, don't think of a low credit score as a terminal illness. It's not. There's ways that we can help you increase that credit score. And as you can see from the graph there, 54.7% of approved mortgages were for buyers who had credit scores under a 749. So you don't have to have an 800 credit score in order to qualify for a mortgage. So you can qualify around 600, 620 credit score. And so let us help you explore those options. Just keep in mind that every 20 points you increase your credit score, you're going to get a slightly better mortgage interest rate. So if it makes sense for us to do a little work and a little homework to boost up and bump up that credit score from either a 660 to a 680 or a 700, then you'll get a much better interest rate, which will help you in the long run. So we have available to help you with navigating through increasing your credit score, credit expert review from the 3 credit reporting bureaus, TransUnion, Equifax, and Experian. And I had a gentleman just recently do the credit expert review with one of our preferred providers. And he got the report, and it had on there the suggestions that he needed to take to increase his credit score. And he was so excited because he was at a 580 credit score. And he said, if I do these 3 things that they suggested and make this change, I will be where I need to be at a 640 in less than 30 days. And I'm like, really? I'm like, that's awesome. So again, don't think that it's a terminal disease. That score is stuck with you forever, because there's things that you can do to increase your credit score so you get a better mortgage interest rate. Sometimes paying off debt makes more sense to increase credit scores. Sometimes it makes more sense to have cash on hand. So I also hear myths from our employees that, oh, I have to pay off all my debt before I can buy. Remember, lenders look at the monthly mortgage payments that are reporting on the credit report a little more closely than the balance itself. So we had a gal in the Eugene area, and she wanted to buy, and she was able to get pre-approved, but it wasn't for the amount she wanted. It was, she wanted to be in a price range $25,000 higher than what she was pre-approved for. So it was actually recommended and suggested to her to refinance her car and try to lower her payment, because she was at a pretty high car payment, about $470 a month. So she was able to refinance her car, get that payment down to $179 a month instead of $470. Her balance didn't change, nothing changed except for her payment. And then all of a sudden she qualified for $25,000 more in buying power. So those are all things that we want to take a look at to help you get into the pre-approved amount that you need. So switching to the next screen, I want to talk a little bit briefly about our hot off the press, literally brand new this month. And I don't know if everybody is aware of that. June is actually a homeownership month. And so we have rolled out for the homeownership benefits a new community action program to help close the racial wealth and homeownership gap. So Cascade Centers and Advantage Home Plus has partnered together and to create a community advocate program. We recognize that affordability can be an issue for certain BIPOC communities, Black, Indigenous, people of color communities. And so our goal is to bring options to the table for discussion, clear up any misunderstanding or, again, myths that might be out there, misconceptions on the issues of trying to secure housing. Many times I hear from our employees, well, I'm a first generation homeowner. Nobody in my family has ever owned a home before. And it's crazy, some of the myths that we continue to hear out there, and some of the misconceptions. And it's hard for certain communities to have those uncomfortable conversations if you feel that you're going to be told no, or if you feel that you're going to be discriminated against and you can't buy, or if you've heard from other family members or others who have tried that they couldn't buy. So we're really on a course to change and this entrenched problem that we have, and really come up with some intentional educational incentives, initiatives, and loan programs aimed at expanding homeownership opportunities, especially for the underserved BIPOC communities. So at the end of the webinar, you're going to receive additional details about in an email, follow-up email, regarding the new Community Advantage program. So be sure and check it out and share that with any coworkers who may not have been able to join us today. So we're going to switch gears. I just realized our time here, and I am going to introduce to you Andrew Lamina. So we're going to focus a little bit now on the financial side of buying or refinancing, and how that landscape has really changed with the pandemic. So Andrew is from Evergreen Home Loans. He's one of our preferred providers that we've been working with for many years. So he's going to discuss where rates are headed, where they've been, who Freddie Mac is. You may have heard of Freddie Mac. Why a pre-approval is important in this market, especially competing against other buyers, and how a buyer can compete, including competing against cash buyers. So Andrew, welcome. I'm so happy that you can join us today. He actually canceled an appointment for us to be here today. So I thank you so much, Andrew. I know you're a busy guy, and so thank you for being here.
Oh, it's my pleasure. Looking forward to chatting a little bit. Thanks so much.
Well, good. Well, take us into pre-approval and what you're seeing in the market right now as far as rates, or where rates are headed. So yeah.
Well, we always get busy this time of the year with the summer because it's nice outside, and lots of conversations about buying, and it's just been a whirlwind given the low rate environment and how popular housing has been, and certainly with prices really going straight up. It seems like having a plan is super important. So I've kind of been working off three thoughts over the past 12 months, and one is recognizing the power of interest rates as it can help affordability. Second thing that I've been thinking about continually is we need to plan and execute, and that's working on a pre-approval. So I'll talk about what the process looks like in a second, but really not only doing a pre-approval, but taking those extra steps that put you in a more competitive position against other buyers, I think is the name of the game right now. And it's important to realize that not every lender is going to take extra steps. They might do a pre-approval, and that's just fine, but sometimes you need extra help in this market. And then the final thing is just to be real about things. Be ready for competition. Be ready for some unpleasantness, some heartbreak with losing offers. And I tend to find if we have these open, honest conversations about this market, then it gets everybody in a really good spot to make some sound, planned out decisions, because there is a lot on the line when you buy a home. And so let's go over what is a pre-approval. And so a pre-approval is taking a look at three things and making sure they all align to the market requirements. It's your income, what's the story on your job? What is a reliable income source, that's going to help repay a mortgage? Could be a salary, hourly job, could be self-employment income, could be passive income like Social Security or pension income. So we need to fully evaluate what are the income sources that are, coming to the table to help pay for the mortgage, basically. We then also look at credit history and credit scores and obligations. So we want to know what credit score is. You know, has there been any major events in the past? You know, what are the monthly obligations? Because we need to make sure that those plus the new house payment fall within the guidelines. And then finally, we need to know, how much money do you have? Is it, hey, I don't have any money now? Well, then we need to work on a plan. Or, hey, I can put 20% down. And, you know, we go through different ways to structure things. So really the pre-approval process is getting all those things documented through an application, and then working with a licensed loan officer to evaluate options to determine, you know, of the many programs that are out there, what are truly the best options, the most realistic options. And then really my job from there would be to connect, okay, this is the right program, let's connect it to the prices that you're seeing, so you can get, at the end of the day, how much cash you need and what your payments are going to be. So that's the goal. Now for us as a lender, and some lenders are different, for us, once we pull credit reports are good for 120 days. So really the idea is that we pre-approve you, and you got a couple months to go out and shop around and get a home in contract and then get it closed. Sometimes it happens, sometimes it doesn't. So if it doesn't, then we just talk about whether we're going to renew or not. But that's really it, is submitting an application and getting in to start working on that pre-approval. So Nicole, hopefully that all made sense. Any questions there for me?
Yeah, so as we advance to the next slide in the mortgage process, I know some of the questions I've heard, especially over the last year, we had a couple up in the Washington area who were buying, and they were under contract last March, right before the pandemic broke out and the lockdown occurred in Washington State. And the husband happened to be in construction. He was then furloughed for about 3 weeks due to the construction industry just being on tight lockdown as well. And so his, you know, they were really nervous. We helped them through that process. They were able to get an extension from the sellers. But I know with, you know, high unemployment rates, a lot of times a spouse may have been furloughed or on unemployment benefits. We're seeing a lot of individuals who are self-employed, and I know there's been some changes in the guideline for self-employed individuals. So share with me a little bit about that as well, the stability and verification.
Yeah, no, that is a really great topic, and it is a continual one because while we are seeing people go back to work, there still are issues with, you know, continual furloughs or things happening, and so it's important to know. So in general, I kind of think about this topic in two different areas, sort of those that have salary jobs or hourly jobs, and then those that are self-employed. So in general, if there's been somebody who's either been unemployed and been able to gain a new job, or even furloughed, you know, in general, as long as there hasn't been, you know, a significant, you know, gap, let's say like a year gap, then in general, once that person's back fully on the job and, you know, they're working, they have a pay stub or two pay stubs, then we definitely have some options. We need to document kind of the whole history of it, but there definitely are some options. And that's how people that did have furloughs last year, you know, got back to work and then were able to continue forward with either their, you know, refinance or their purchase if they could keep the you know, the transaction together. So salaried and hourly employees are a little bit easier to work through on those difficult topics. What's definitely more challenging is those that are self-employed. The investors in the market that build all the guidelines and kind of, you know, impact us as a lender in terms of what we need to do, they are definitely eyeing those that are owning their own businesses quite harshly. So we actually have to get a lot of documentation, most recent two, you know, tax returns, plus a year-to-date profit and loss statement, plus you know, the most recent 3 month business bank statements, And so especially FHA, VA, Fannie Mae, Freddie Mac are very keen on looking at the trends, what's happened with the business. And, I don't think that'll be changing anytime soon. So, there's just really unique, everybody has unique circumstances. And so to me, it's all about, addressing each and every person and figuring out uniquely what the story was behind, the last year and a half, and then working through options from there.
And you have some lender-specific benefits that I've heard from our employees that they've accessed and used that have been super helpful, like the lock and shop program, where a buyer could lock into an interest rate and be protected for 90 days, I believe it is. Can you talk to me and share with us a little bit more about the details of the lock and shop if people are really concerned about increasing rates?
Yeah, so I mean, it's a great product. This is definitely a unique option that we offer at here at Evergreen Home Loans. And actually, I'll talk about Lock and Shop and our Security Plus full underwriting program, if you don't mind. So the idea with both programs is really we want to provide as much. We want to front load as much work to provide stability in the process as we can, and provide options. And that's really our goal, is to get ahead of things as much as possible. So early in the year, in January, rates were still really on track with where rates had been last year, which would be lower than they are today. And, a number of people, we started talking about what are the trends. We knew that there would be more people going back to work. There would be some pricing pressure based on the stimulus, which would push rates higher. And so, in January, I did a number of what we call the lock and shop, where we set a worst case interest rate for 90 days while you're shopping for a house. So the goal is, we can't get you today's rate because you'd have to have a home in contract, but we can work to set a worst case interest rate. And it ended up working out well, because in February, leading into March, rates rose about a half a point. So for some people, they were able to secure a worst case protected rate that protected them and gave them still that budget to work off of. And they didn't, we all know, I mean, rates are going to move while you're trying to buy a house, but it's nice to have some parameters to build your budget and build your plans off of. So I find it tremendously helpful. Now, I'm also strategic about it. Right now, we've seen rates stabilize and actually start to come down a little bit again. So right now, I think I'm sort of in a wait and watch with my pre-approved buyers. We might be using it, if we get nervous about the market. But for right now, we're in a pretty, I think, stable position with where rates are. And so, Nicole, I know you were asking me about where rates are and, where are they going potentially?
Yeah.
So
yeah.
I always like to highlight some of the big projections that come out, because, and this is something for everybody to know, everybody's going to get unique quotes to them, meaning credit score, property type. There's so many different things that, no two people are going to get the same quote. If you walk in an elevator, somebody might be buying a condo, somebody might be buying a single family home, talking about what they're getting. It's going to be different. So that's the first thing to know, is there's no one, simple answer for everybody. So I like to look at the national averages just to see where things are. And the Mortgage Bankers Association just today actually released their weekly rate survey, which highlights rates as of last week. And it's continued to improve. They reported the national average on their weekly survey right at about 3.150% for a 30-year fixed mortgage. And we had been up in the 3.3, 3.4 range, in parts of March and April on that report. So that's, again, the Mortgage Bankers Association. They do a weekly survey for, I think it's 75% of mortgage lenders. So that's a pretty good broad-based, general average. And so that's good. At points last year, it was definitely lower in the 2.7, 2.8 range. So we're still higher than last year. But these are all amazing, great, historically low rates. So it's hard to complain. And talking about where are things going, I always tend to look at, again, some national projections because they're all publicly available and it's, always searchable. But Fannie Mae puts out a monthly rate forecast of where they think things are going to go in the next 7 quarters. So I looked at the last one they published in May, on May 10th, and they were forecasting, the average mortgage rate for a 30-year fixed at some point towards the end of the year would now hit about 3.2%. So basically they're projecting that we're probably going to be pretty stable through the year in terms of interest rates, which I think is good news for all buyers that are thinking about it. Stable rates means you can plan and prepare. And then going into 2022, by the end of 2022, they're thinking the average rate will tick up a little bit higher to around 3.5%. Now, I've seen projections in the past, so they're continually updating these. They had those much higher in the past. So I think I would interpret that, they're recognizing that there's still millions of people that have not retained and got back to work. And that is going to eventually show up in some of the numbers and keep rates low for a while, again, which is good for buyers to take advantage. Sorry to go on a long-winded answer there. I hope that
No, that's great. Yeah, let's advance to the next slide, Hersanti. And I want you to talk about what not to do during the mortgage process, and then also spend some time on that Security Plus seller guarantee, the $5,000 guarantee for buyers to use to their advantage.
Yeah. So just real quick, the things not to do. It's pretty easy. It's a pretty easy list, but a lot of people just don't bring it up, and it's and so it's important to discuss. And basically, in the mortgage process, all the investors, Fannie Mae, Freddie Mac, require lenders to, at the last possible moment, to make sure before the loan closes that everything is what they believe they verified, and that there's nothing changed or anything like that, and that those that are on the loan still qualify for it and can repay it. So we have to verify employment potentially on the day of funding. The fulfillment teams are calling employers to verify employment. So that's a big one is, we need to know if anything's changing with employment or, if anything's happening, because ultimately we'll find out. The other thing is we also do what's called a credit refresh, which is not a hard inquiry on the credit report, but it does allow us to see what activities have been happening. So, you don't want to go buy a new car because lenders find out. You don't want to miss payments on obligations because lenders find out. You want to make sure that everything's basically status quo all the way through, because there are checkpoints in the mortgage process that uncover these things, and it's definitely no fun at all. So to have these things pop up, because sometimes people are well qualified and it's not an issue, but other times we are on a razor's edge for qualification, and any little change could move us from being an approved status to a declined status. So you basically want to keep it status quo, and then communicate. I mean, that's a huge thing that, it's kind of funny. We're doing a huge transaction, the biggest thing financially that most people do in their lifetime, but sometimes we don't hear from people. They go, out of touch. I mean, this is a process that all parties need to be at the table working together to go from start to finish. Now, Nicole, you asked me about Security Plus, and I definitely want to discuss this. So this is a lender-specific program we have to help our clients become more competitive as buyers. I mentioned the general pre-approval process is complete an application, work with a loan officer to evaluate income, assets, and credit. A lot of times lenders are just running some technology which reads it all, and then they're spitting out a yes or no answer. The reality is there's a lot of human process involved, and there's a lot of verifications involved. So our Security Plus is actually front-loading that experience and process. The goal being that we get our clients to a fully underwritten status with an underwriter. And in the process, an underwriter is the person with the yes/no stamp that says officially, yes or no. And so we want to get our clients to that status. And when we do, it gives us a lot we can do. I can advocate for you to a seller or to a listing agent and basically say, hey, this person's been fully vetted, not just by me, but my processor and my underwriter. We've got 3 eyes on it. We've got everything verified. All documentation is in. This buyer is rock solid. You're not going to have any issues. And we are so confident when we get to Security Plus, we put a financial benefit on the table for the seller. So we do a $5,000 guarantee on the financing. And that, along with some other tactics that you mentioned, Nicole, is just one thing to start stacking up when you're trying to write offers to try to get the winning bid, you know, in terms of everything. So that's just a product. A lot of people like it, but it does take a commitment. We got to work together to get there on it, you know, to make it happen.
And you really advocate for our buyers. I know in the past when there's been multiple offers on the table, you've really gone to bat for our employees by even reaching out to the listing agent and really building up our buyer as a solid candidate and why they should accept, you know, their offer. So I know you've done that in the past for our employees, and I really appreciate you bringing all that you do to the table and the additional benefits. We're kind of getting close to the end of our time here. So as we navigate to the final slide, I want to make sure that everybody understands and knows how to get a hold of us. So if we go one more, Hersanti, be sure and reach out to us through our website, advantagehomeplus.com. We have an online scheduler that you can use to pick a time to connect with us by phone, one of the benefits advisors at Advantage Home Plus. So we've got a whole entire team here to support you. So schedule a time with us directly, reach out to us directly. But I do want to open it up to some questions. We had a couple of questions come through, entered on the box here, the comment box. Is there a timeline for comparing homeownership versus renting? And there isn't. Remember, there's no limit on the number of times you reach out to us or even the number of times you use, for instance, the real estate and mortgage benefit. We have employees who purchased a house previously, used the $1,000 credit for mortgage services, and then a year or two later use that $1,000 credit again for refinancing. So there's no limit on comparing homeownership versus renting or using the benefits or connecting with a benefits advisor. Is the information valid for California as well? Absolutely. In fact, Andrew, you're licensed in California, so you can help our employees who are thinking of California. And that brings up another good point. If you have a property that is in another state, we are nationwide, so we can help with getting you resources and with the process. So we have a corporate office in Mansfield, Texas as well, in a different time zone to help our employees nationwide. Do you help with purchasing manufactured homes? Yeah, we help sell and purchase them. We have an employee now who's selling her own manufactured home, as a matter of fact, that we're helping. So yeah, we can help you navigate that as well. It really depends on if the manufactured home is inside a park or not. That's kind of the key to securing financing. So if it's on its own land, then the manufactured home can be financed. But we're seeing not many lenders willing to do financing on manufactured homes inside a park, just so you know. And so let's see, someone had a question about lumber, the cost of lumber. Yes, lumber is going up. You've heard in the news, I think it's like something like 70% higher now than this time last year. So that definitely affects timelines with new construction. And so that's the thing, if you get locked into a contract with a builder in the future, yes, housing lumber prices is going to impact the property values for sure for new construction. Somebody said they just shed tears this week. Well, no, we can't have anybody crying. So no shedding of tears. So reach out to us. We want to connect with you. And that's what the EAP is here to do. And there's no question that we cannot answer. So, I mean, we've heard all sorts of different situations where I had a father who son had passed away, and he was having a hard time getting title of the property that was in the son's name in order to sell it. And so there's really no situation that we can't help with and come alongside you. So let's see, I'm scrolling down here. We got a couple additional questions here in a few more minutes. How do we get a hold of the financial coach? Yes, reach out to us through our scheduler or give us a call. You can also text us. We have a great mobile app as well that you can reach out to us through. So we'd love to text you that link if you're interested in the mobile app. There's some great calculators in that mobile app. And there's a question about bankruptcy as well, and a bankruptcy that will be falling off next March in 2022. And so, Andrew, as far as bankruptcies go, give us an update on the guidelines.
Yeah, so every program is a little bit different in terms of the waiting periods, you know, in terms of standard guidelines. So it could be anywhere post, and it depends on the type of bankruptcy, whether it's a Chapter 7 or 13. It could be anywhere from 2 years to 4 years. If it's actually, the way I read the question, if it's falling off the credit report, say after 7 or so years, then really options may be available sooner, you know, now versus later. So you know, on credit, it's always about having a conversation and understanding what happened in the past, because, you know, from my perspective, everybody's had issues at some point, and we just need to identify what it was and what's the market bearing out in terms of waiting periods. So I would never be bashful about asking questions.
Yeah, it's Chapter 7 to be more specific.
Yeah, so depending on programs, it could be anywhere from 2 years to 4 years, you know, depending on the program that we're using. So okay. From the discharge, and then, you know, there's some other things we have to take a look at is what's the credit history been since then. I mean, there's a lot to get into, but you know, I think it's definitely well worth giving a call and having a conversation.
Okay. And don't forget, you have the financial benefit too through Cascade Centers, EAP, 30 days every year that's paid for by your employer with the money coaches. So we can always send you a flyer, or you can reach out to Cascade Centers, text them, and they can get you assigned to a money coach. Let's see, there's a little bit of a delay, so my screen's not moving as fast. I think, let's see, do you work with couples who have mixed status? One is, and I can't see the rest of but absolutely. So there's, again, I think that financial kind of fitness consult will be really helpful to open up some ideas towards different programs. I didn't mention either that there's some great ways for creating down payment or just for saving. Like the IDAs are really popular, individual deposit annuity, where there's matching programs out there. So if that's something you're interested in as well, where it's a program that you have to qualify for, but you put in $1 and they'll match $2. So at the end of the year, you know, you'll have, instead of $2,000 saved, you have $6,000 saved towards home ownership and buying. So those IDAs are really popular too. So we can help you explore those programs. And I think that's about it. We're up against our time here, so reach out to us with any additional questions that we haven't been able to get to today. Hersanti, I'm going to turn it back over to you, and let us know, what is there an email that you'll be sending out as well?
Yes, so an email be sent out to everyone within a week after the broadcast. And that email will have just some information that was mentioned in this webinar, along with the recording and presentation slides in case you want to review it later on. I want to thank you both so much for joining us today. That was a great presentation. And if anybody has any questions, feel free to reach out to Nicole or to Cascade, and we're happy to help you out.